One of the biggest mistake that first time home buyers or even the home buyers who have not done their math correctly makes is they do not know how much they would end up in paying. So in this video, I'm going to show you exactly how you can calculate how much you will be paying month over month for a period of time to become a complete homeowner. Because if you are buying a house and you have not paid for it completely, you are taking a mortgage or a loan on it, then you are not 100% homeowner of that property. And in this video, I'm showing you exactly how much you end up in paying over the lifetime of the loan, and you can see what all multiple different options you can have based on the amount of down payment you make. So in order to do that, you can get to my website mohammadrealtor.com/mortgage calculator. This is the link I'll put in the description as well. So once you get to this website, here if you scroll down, you will see a calculator, and this calculator is very effective in telling you exactly how much you will end up in paying. So suppose you are going to buy a house which is valued for suppose $320,000, and suppose you are going to pay 5% as down payment before you completely buy the home. So as you know that as long as the house is, if your down payment is less than 20%, you will have an extra portion that you need to pay. It's called PMI. It's a mortgage insurance premium that you need to pay. Usually it's 1%. So I will show you exactly how much it will end up in costing you. So suppose the house property is valued at $320,000 and you have agreed to pay that amount, and in that case you are paying 5% down payment, which is $16,000. Then you are going to take a loan of about $304,000, and suppose by the time you pick this, the rates are not exactly 4, it's maybe 6 and whatever, like let's take a 6% loan. So if you got an FHA or whatever loan at 6%, then you will see exactly here, and before you see the numbers, you can also see and enter the property taxes. Usually it's 1% to 2%, 1.5%. So find out from a realtor what's going to be your property taxes, and usually PMI is 1%. And also you need to get an estimate of home insurance. In North Carolina, in this area, usually $1,000 is a sufficient amount for this kind of house, or this size house, or $300,000 house. Also, if your community has a monthly HOA fee, you can just put it over here. So maybe it could be $30 or $40. So let's put $30 or $40 on a monthly basis. So now if you see, it will automatically do the calculation. So you can see that total you will end up in paying about $2,400. And here it shows you the breakdown. So here you can see that your PMI is costing you $253 per month. Your monthly taxes would be around $200, insurance will be $83, and HOA is $40. And then your PMI will end in August 2035, because by the time your total home ownership will become 20% of your total value of the house. So and you can do a refinance, or before you can do a reassessment of your property, and if your property value is increased and your equity has increased to 20% or more, then you can call your bank and get it, your PMI removed, because that's the additional cost you pay for not paying up to 20%. And then you can see that you have your monthly payment as 2399 right now, but after August 2035, in this case, after you've made the total PMI payments, your PMI will reduce and it will make it 145, and that will remain until the end of the loan term. So right now the loan term is 30 years. So suppose you don't want to pay till that long, if you want to do it just for 15 years, then the total monthly payment will change, right? You can see you can pay off in 15 years, but it will become $3,000, over $3,000. So suppose it's too much for your outflow, then you just bring it back to 30 years, which is still not huge difference between 2,400 to 3,200. I know it's like $800, but it will save you 15 years of paying your mortgage. Now here you see that one comparison, like if you see that mortgage details, it will show you how much you end up in paying in total Like in total, you are paying basically over the period of 30 years, you're paying 800,000 for this $300,000 house. And you can see which portion is taking the most. You can see that interest is almost like more than your total principal amount. So your total principal is $304,000, but you end up in paying over $350,000 as a total interest. And also you can see the PMI, the total taxes. You cannot avoid the taxes and the home insurance, but you can definitely avoid the PMI. If you have cash, you can put over 20% or more, then this portion will be gone. You don't have to pay this. So this is a very good visual to make you a decision on how much you should pay for your down payment. And also this one is a very good comparison where it shows the monthly versus bi-weekly payment. So sometimes some of the banks allow you to make a bi-weekly payment. So as soon as you get your salary or your check, you just put like 1072 in this case every 2 weeks. And if you do that, you will save 5 years in total. Like you see that if you do it monthly, your total payoff date is 2055. But if you do it bi-weekly, you literally save 5 years of your mortgage payment. And also it shows you how much total interest you pay in this case and in the other case. So in that case, your actual interest savings is over $75,000. So it's a very good indicator and a very good visual to let you know like the power of making a bi-weekly payment. And on top of that, if you increase this to maybe $100 or more, then definitely this number will shrink down, and this number will also come back to like 5 to 10 more years. So that is something you can try. But in this calculator, it will not show you different scenarios, but at least it will give you a basic way of identifying how much you will end up in paying based on the different interest rates. So if you suppose if you get 1% less interest, like sometimes the builders or the sellers, they buy down the rates. So suppose if you get it for 5%, you see that it literally changed. So from 6% it was 2,400, in 5% it's 2,200. So almost $200 per month you'll be saving if interest rate drops by 1%. So again, this is something I wanted to show you to get at least take advantage of this tool while making any kind of purchase decision. If it could be anything, it's not just house. If you're buying a car for $40,000, it's the same math that they apply. So you can use this calculator for free. Get to my website and use this to find out how much you would end up in paying. It's very good for your financial analysis, so that you do not want to become a house poor, like your all of your savings and all of your earning is going towards your mortgage. That is not a great financial decision. So being a homeowner or becoming a homeowner should not drain you out of your cash flow. So that's why it's very important as a first time homeowner to be very prudent on where your money is going. And suppose if you're renting right now and if you're paying like 2000 or 2400 as rent, and if you get a similar property for this amount, and most likely you will get in the Triad area, there are properties which are brand new, you can still get for 200 300,000. Like I can get you 300 2000 $320,000. You can get a 4-bedroom brand new construction in a great neighborhood, single family house. So again, if you are in this boat and you are still contemplating, come to this. You can call me and you can text me. You can have this button, you can call over here also. My assistant will respond to you, and we can set up something to see the houses that would fit your budget. And that way you will not only make a financial decision which is great for you and your future, but also you will become a homeowner and you will build equity, and later on if you want to sell, you will get something back. But if you are just a tenant and renting, you are not gonna get anything back from whatever is gone. So thank you for your interest and watching this particular video about the financial calculations for buying a house. Let me know if you have any questions. You can put your comments or like this video if you want to. Thank you again and have a great rest of your day.